Hey there, it's Benj Foreman with Triple Cord Real Estate, and in this video I wanted to highlight two stories for you. Number one, I have a full market update for you, all the facts and figures on what has been happening to house prices. Now there's some interesting things have been happening with the interest rates. You know that they've been going up, but you might not know what historically the relationship has been between rising interest rates and house prices. So we'll get into the nitty-gritty of that in just a minute. And then at the end, I have some fun news to share with you. It seems like California is trying to get their foot into our community. So I'll share that at the end of this video, but let me get back to my desk now and we'll jump right into it. I took a class a couple weeks ago on real estate investor financing, and we took a poll among all the agents that were there. We asked, who here thinks that house prices will go down in the next year or 2 years? And not one single agent raised his hand. And then we took another poll and we said, who here thinks that house prices will rise 3 to 5% over the next several years? And every single agent raised their hand, myself included. And the reason is house prices are on the rise, and that's because they are driven by low supply and high demand. Now, I feel like I've been saying this over and over in all of my videos, but that actually is the case. And let me break down the numbers here for you. The median house price in Ada County just rose once again. We're up to $549,000. Half of the homes sold for more than that, half of the homes sold for less than that, which is a new record again for Ada County. If you compare this number to last year's house prices, we're at a 21% increase. So the median has gone up 21% in 1 year. Now, it's also important to notice the new construction versus the existing home market share. New construction, so new homes, was about 36.7% of the market share last month. Now that's an important statistic to note because new homes are more expensive than existing homes. The median house price for new construction was $587,551, which is 30% more than it was last year. Now, because new construction homes take up about 37% of the market share, and because new homes are more expensive than existing homes, this does drive up the median price for Ada County. So just keep that in mind, especially if you're thinking about buying an existing home. Supply chain issues, material costs, inflation, oil prices, all of those are contributing factors to the rising prices in particular for new construction. The average home last month sold within 23 days. That was the average days on market, which is an increase of about 155% year over year. So quite a large drop, or quite a large jump compared to last year, but actually a drop when we compare to January. The average days on market in January was about 33 days. So what that means is this is the springtime and the real estate business is starting to pick up. People like to move in the spring and in the fall. Those are kind of the two popular seasons. And as for inventory, we're up again as compared to last year. About 493 homes were available at the end of last month, 62% more than we had last year at this time. The average home last month sold for 99.6% of the list price, which is quite a bit different from this time last year. Last year, the average home sold for about 105% of the list price. Now, again, the thing to keep in mind is that about 30% of our market share is new construction, and new homes almost always sell for the list price. So when we're talking about existing homes, we're probably going to be a little bit lower than about 99.6%. The point is, we're not at the same position that we were last year at this time, where we had multiple offers on almost every single home, 20 some offers, people going 20, 30% over the list price. That's not the situation that we are in right now, but we are still in a very competitive market, and we still are very much in a seller's market. Now, these numbers are not unique just to the Treasure Valley. House prices are up all across the United States. The average monthly payment went up 28% over this past year. The median rose 15% in 1 year, so it's currently at $357,300. That's the national median across all of the United States. And this marks 120 consecutive months of year-over-year price increases. That's the longest running streak on record. That's 10 years of consecutive price increases. Now, what's interesting is if you compare our median to the national median, our median went up 21% over this past year, and across the United States, it went up 15%. So we're kind of in the ballpark, you might say. Now, what I think all of this means is that we are in for another competitive spring. I think a couple things to expect are, number one, rising mortgage interest rates. Right now, we're at about 4.71%. We're also going to see house prices rise. Now, at this point, you might say, wait a second, if interest rates go up, won't that cause less people to buy, and that will therefore lead to decreasing house prices? You might think that that's the case, but experts are actually saying otherwise. Here's a quote from Doug Duncan, who's the Senior Vice President and Chief Economist at Fannie Mae. He says this: "What I will caution against is making the inference that interest rates have a direct impact on home prices. That is not true. Over the past 30 years, there have been 6 different occasions where interest rates have risen by 1% or more. And on all 6 of those occasions, house prices have also increased." So if you look at what happened back in 1993 and 1994, for example, over a period of about 14 months, mortgage rates increased by 2.38%. But over that period of time, home prices also increased by 3%. In 1996, interest rates increased by about 1.2% over a period of about 8 months, and home prices rose 2% during that same period. And then you can see back in 2000, there was 19 months of continual interest rate hikes. It went up about 1.8% overall, and house prices increased 13%. And then you can look at the rest of the numbers there as well. So over the past 30 years, the history has been that when interest rates increased, that has not had a direct effect on the home prices. In fact, home prices have continued to increase alongside of interest rate increases. Now, another factor to consider in all of this is rents. Rents are definitely on the rise across the United States, and what this is doing is it's continuing to drive people into the buying market. Now, let me come back to the interest rates here for a second. If you look at this chart here from Mortgage News Daily, you see that about a month ago, the beginning of March, interest rates were at about 4.09%. And then about a week later, they jumped up a quarter point to about 4.28%. A week after that, went up another quarter point to about 4.5%. Then a week after that, another quarter point, which is where we are today, right around 4.7, 4.75%. So my whole point is this: if interest rates seem high to you right now and you think, well, let me just sit it out and wait for interest rates to drop and then I'll buy a house, remember this, it might take a couple years for interest rates to drop. And I always like to remind myself and my clients that you can always refinance if interest rates drop. Now you might say, well, but you got to pay to refinance. It might take $6,000 to refinance at a lower interest rate. That's true. But do you think house prices will rise more than $6,000 over the next 2 years? Absolutely. They could rise $6,000 in 1 month. So if you've been sitting on the sidelines waiting to get into the market because the interest rate seems high to you right now, there's still a very good chance that you'll have a lot less buying power 2 years from now because house prices are going to continue to rise as well. And then finally, 2 big companies are coming to the Treasure Valley. One of them is California. Is California coming here? In-N-Out just announced last month that they are building a restaurant at the Village in Meridian. Now, they're still in the planning stages, but they plan on being here, quote, in the not too distant future. So my guess is within the next couple years, In-N-Out will be here in the Treasure Valley. Now, I think some Idahoans are a little bit suspicious because In-N-Out is a California company, and Idahoans tend to be a little suspicious of California. But to be honest, I really like In-N-Out, so I'm kind of looking forward to eating a nice, juicy double-double. But also, Facebook is coming to Kuna. They just announced last month that they are building a 960,000 square foot data center in Kuna. This is going to be Facebook's 15th data center across the United States and their 19th globally. It's an $800 million project. They're going to begin building in September of this year, and construction will continue through 2025. Now, the cool thing is they're investing $50 million in a new water and sewer system for the city. Now, I checked their Facebook page, and they said that they chose Kuna because, quote, Kuna has good infrastructure and renewable energy. Kuna also has a strong pool of talent. Wink, wink. I think they're probably just trying to make the residents of Kuna feel good. And they also say Kuna has a great set of community partners. My guess, though, is they chose Kuna because Idaho passed a law back in 2020 that gives a pretty big tax break to data center operators. So it all comes down to money at the end of the day. And I think that they see something monetarily advantageous to building a data center here in Kuna. Now, the goal is for them to operate with 100% renewable energy, which is great. Anything that can save the environment, that's great. I'm all for that. It will also be 80% more water efficient than the average data center. What that means is they're relying more on outside air to heat their servers. About 50% of the year, they'll rely on outside air rather than water to cool their servers and their systems. Now, the upshot for the city is that it will bring about 1,200 workers to the site at the peak of construction. And long-term, it'll bring about 100 jobs total for the city. So if you're thinking of an investment property in the Treasure Valley, Kuna might be a safe bet because there's going to be about 1,200 workers here that are going to need some place to rent in the next coming years. And there'll be an increase of about 100 jobs total in the city. Thank you so much for watching. If you are thinking of visiting the Treasure Valley, I actually wrote a guide for visiting the area. Don't come until you download it. It's a free download. I'll put the link in the description box below. And of course, if you have any questions, reach out to me.